You're in the Business Insurance Zone with me, Steve Savant, National Insurance Columnist and Financial Color Commentator. This week on The Biz, our monthly update series for December 2012, and today's show, our annuity update with special guest Eric Palmer, nationally recognized annuity expert.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, the guru that is all annuity, Eric Palmer. Hey, Eric.
Glad to be here.
Eric, I'm telling you, I remember I promised last time we did the show, and I have to say last month's updates, especially the life insurance industry update on AG38,
right?
Oh my gosh, we got pounded on that. But right next to it was the annuity update, and everybody ragging on me because I've said I'm not going to talk about low interest rates anymore. So maybe I'll have to let you do it. But we're trying to sell annuities, and I have to say I just saw the variable annuity and the fixed annuity third quarter numbers.
Right.
And if you haven't seen these numbers are unbelievable. And I got to tell you, I was a little surprised by the fixed players. And it just tells me that this market is in flux.
Right.
So let's talk about it.
Well, interesting you brought up the third quarter numbers. I was actually over Thanksgiving weekend sitting with my in-laws, and I had challenged my father-in-law to make a guess at how much total premium has gone into annuity products, fixed and variable, in the third quarter. And he had guessed a couple of $1 billion, and it was well over $100 billion. It's interesting to know that people are still flooding into the annuity marketplace, and rightly so. We're sitting on a 10-year treasury at about 1.6. We're sitting on a 30-year about 2.7. There's not much there for those long-term hold positions, and so when you're looking at some of the annuity rates that we have, it's still a very competitive market, despite it feels low to us as insurance professionals because we've seen our caps and our rates off the charts. And right now they are lower than historical numbers that we're used to. But when we compare that to the global number, what's available to consumers today, annuities are still hitting a home run.
I have to say, and this is, please don't take this as a slight on career shops, but in that fixed report, I saw several carriers that have proprietary field force, and they were doing significant numbers. Remember, the top 20%, right, 80% of the business in the United States, right. VA and fixed. And that just tells me that none of those carriers, I can't think of one of those proprietary carriers that would be in the brokerage market and be in our top 10 plays in any of the divisions we talk about.
Well, it's interesting that you brought that up too. There's so much selection out there. We're going to cover a couple of products here today that we like, that we enhance, but that's because we've done a lot of research. We look through all 55 insurance companies and then some that we deal with to pick the top players. And those markets, it goes to show you that you still don't even have to have the absolute best rate to be making a sale in today's low interest rate environment. So the rates we're going to talk about today, they're off the charts in grand comparison, and you need to be paying attention to these products.
And by the way, can I say this? I'm going to let them loose. These rates on every platform that we're going to talk about in a moment will eat 95% of the market out there. So it's not like we're giving you our guys and this is all we can sell and we're a brokerage. We're mercenaries, right? But think about it. When we're talking about these numbers right now, what Eric's going to go through, these are pretty much the edge.
Right.
So let's just start out and go ahead.
Well, I talk about the 5-year CDs a lot. 5-year CD at a bank's 1.4. Our 5-year annuity rates, although they've come down a little bit, Sentinel Life, we've been talking about them all year long. They just brought their numbers down. So for the month of December, you can get a 5-year Sentinel at 2.95%. So again, just 5 bits off of 3%. Still very close to 3%. But compared to that 1.4 taxable CD, it's a really nice number. We've also got Athene coming out. They've got a 2.75 on their 5-year, so a little bit bigger company if you're looking for a broader sheet in terms of assets and company strength. But they have a 7-year at 3.2. So if you're looking to get over 3%, you can still get that with a 7-year annuity through Athene. I wouldn't go past 7 years, really. As I mentioned before, we have to assume interest rates are going to recover somewhere. 5 years is really that comfort zone for me personally, but it's good to know there's a 3% or 3.2% out there with Athene on the 7-year. We also have Oxford Life out there, and the reason I keep bringing them up, they're not hitting a home run necessarily with the rate. They've got a 2% rate on the high band on the 5-year. But what I like about them, it's a free lifetime income rider that's attached to the product that's currently paying 7%. And it's a 5-year spread. Again, it's a lifetime income based type of a rider. But if you're doing some laddering strategies, if you're using index and combination, 10 years and 5-year products, and maybe some SPIAs, I would look at this one for that middle leg of the race. It's a 5-year product. It's got a minimum guarantee of 2% on the MIGA rate. currently for 5 years, but 7 on the roll-up.
Can I ask you just real quick on the Athene? What do they mean by enhanced liquidity?
That's a good question. You can buy up some additional liquidity, which is giving you beyond that 10% free withdrawals. It's also giving you the ability to have the interest rate withdrawals and the systematic interest withdrawals, which will come up on a monthly basis. So for a little bit lower rate, for example, that 2.75 goes down to a 2.55, but you can build in some additional liquidity in the product.
Well, I just want to bring this up just because it could be strategic and tactical. If you have a 5-year rate at 2.75 and you say, hey, I like that rate, but I need some flexibility, I need some liquidity, and you're spending down 20 basis points to get it, I don't know, maybe that's a good deal. And the longer it haul, in fact, their 7-year at 320, you're spending 25 basis points to get their enhanced liquidity at 295 versus their 327-year rate.
Well, and to that point, if you look at all the competition in the marketplace today, the average 5 years anywhere between 2 and 2.5 with the liquidity. So even though Athene's bringing their rate down, they're still at 255 with the liquidity. So you can buy up the liquidity, be competitive with everybody else, or go off the charts. If your client's looking for pure deferral, they just want to get the max rate, you've got that Sentinel at 295 and you got Athene at 275.
Oh, I love that flexibility, and that is, I think, a huge consumer issue.
Let's talk about index caps real quick because I know that's a hot topic. Index annuities are a great opportunity right now in this marketplace. We have low interest rate environment. Consumers are leery of the stock market ups and downs, and they don't want necessarily to have all of their money exposed anymore. But low caps are out there. So I want to bring out Athene. They've got a 4.6% cap right now on their S&P point-to-point. And National Western, a global look-back strategy, it's uncapped. So I'm going to repeat that. It's an uncapped strategy. Those are starting to become popular, but there's only a handful of companies out there that have it.
When we'll come back, we're going to talk more about a little pickup on the index, and then we have a whole other section of annuities to talk about. Back from the break, we're going to talk about current index annuity rates again, cap spreads, income riders, all the things we talk about. And don't forget to enroll in IULUniversity.com for the best training, education, sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Welcome to the Brokers Alliance Auction House. I'm Jessica Lopez, and that's Steve Savant. What are you doing?
I'm practicing my auctioneer skills for our carrier bidding process for our producers' substandard cases.
Steve means that we're packaging our substandard cases for underwriters with specific carriers that are known to specialize in certain health impairments.
There are really only a handful of competitive carriers in each category, and we've identified who they are.
It's all about securing the best possible underwriting offer by packaging your substandard case with the right carriers.
So let the bidding begin. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Eric Palmer. And remember, you can order today's giveaway at BrokersAlliance.com. Actually, you could write me at The Biz, but at BrokersAlliance.com, you'll find our annuity spreadsheets. Everything we're talking about is out there. And remember, you can always call our specialist, 1-800-290-7226, extension 125. And remember, before moving forward with any of the ideas we talk about, especially when it comes to taxes, always consult your tax advisor and your broker-dealer compliance officer. We're talking about all that is annuities, touch a little bit more on indexes, and then we'll move on.
Well, as I mentioned there at the beginning, we've got National Western with an uncapped strategy. I would definitely take a look at that product. The caps on the additional options for the average index annuity out there is pretty low. You're going to look anywhere between 2 and 3, maybe 3.5%. So, as I mentioned, they're also with Athene at a 4.6% annual point-to-point. That's a huge number right now. So 4.6% cap if you're looking for the max cap out there, if you want a little bit more predictability. But also, again, National Western with that uncapped strategy.
How can they do that?
The uncapped?
Yeah, that's amazing.
A lot of these strategies are based on participation. So it goes back to sort of the old math where instead of having 100% participation at a 4.6 cap with Athene, you could have a participation rate. Right now they're averaging anywhere between 40 and 45% on an uncapped strategy. But in big boom markets, that could be a big deal. So
Sure.
For the flexibility those types of products offer, the ability to reset that index strategy every year, that might be a product to look at, because if you're able to predict the market somewhat, obviously we can't predict the market entirely, but if we're starting off with a low number, the uncapped strategy might be great. I also want to make a quick mention for Sagicor Life. I brought them up in the last month's call, but again, such a strong guarantee. It's a 2% minimum guarantee. That means within the 9-year period of time on the surrender charge, you're at 128% of your original principal guaranteed. So aside from the caps, look at what the worst case scenario could do for a consumer out there. On a 9-year index annuity, a 4% S&P 500 annual point-to-point cap, but that 2% minimum guarantee, you're guaranteed anywhere between 2 and 4. And I like that type of probability. So on a 9-year product, it's very strong. They also offer the best liquidity I've seen in the market. After 5 years of deferral, if you have not taken a withdrawal from this product, you can get half the money out. That's a 50% free withdrawal with no penalty.
So you really don't lose it.
You don't lose it, exactly right. So again, if in 5 years from now the interest rate market does recover, your client has access to some money to get back into some other place.
Well, let's talk about, is there any action on MVA, or is that just dead in the water right now?
Well, you know what? Most products are going into a total MVA mode. So you're going to be lucky if you find a product out there today that does not have a market value adjustment. We've got a little window here right now to work with. Right now, the Forethought Income 125, it's a product that we love because it offers that 25% immediate bonus to the income account value. It's one of the best lifetime income products. If you're looking to take income in the 60s, it's most likely number one. What we like about it is it has a free rider. So the lifetime income component of this product is free. There's no annual charge, which could equate to thousands of dollars for a lot of consumers.
And by the way, do you think people really get that? Because they don't understand the impact of actual riders, income riders like this, because they could be up to anywhere between 90 and 115 basis points.
Oh, absolutely. Some of the new products out there are even 140 basis points. Wow. So when you break that down to how many thousands of dollars a year that costs your client, you start to really see the math and the way these things work. So unless your client's going to go for lifetime income, you better think about whether or not you're going to add the rider, because it could be working against you in the rate of return.
Good call.
Forethought's 125, the rider's free. Now that product currently has no market value adjustment. So that's one of the other reasons why we like it, is because you're not going to have the adjustment if your client needs to make a move within that surrender charge period. That could be a negative impact for people, especially in a rising interest rate environment. Right now is a bit of a fire sale. We have reason to believe that product could change. Interest rates aren't improving in the global economy right now. They're still staying pretty flat. So insurance companies still need to look at ways to slim these products up and make them manageable for the companies themselves. So keep your eye on that one. Talk to our marketers here. I would definitely quote the 125 if you're doing anything with income, especially in the 60s.
Well, I think that's huge. No fee, if I heard you correctly, no rider fee. 25%, I love that, a value account bonus. And what's my hold position on this?
Well, you're looking at a 10-year. It's a 10-year product. So again, this is a lifetime income-based product. That, we sell it for the lifetime income. That's the primary reason why you're going to look at this thing. And without the market value adjustment, that exit strategy just is a little bit prettier than your average annuity out there. That's one of the things that we really like about it.
Well, let's just move on a little bit to some of the products that have some of these living benefit or LTC riders. We just came off in November,
right?
LTC month.
Right.
We were tweeting and blogging about living benefits the whole month, all the way up into Thanksgiving.
Right.
Talk a little bit about some of these carriers and players.
Well, Athene's got a brand new product out there. We are really honing in on this thing because not only does it do the lifetime income at an 8% simple for 10 years, it also gives you a 5% simple for 11 plus years. Now, think about this for a second. Lifetime income riders out there right now are only 10 to 20 years, maybe 20 years of the guaranteed interest rate that they're providing. So they're charging you for the entire life of the contract, but you're only getting the interest guarantee for maybe 10, maybe on a few products 20. This product, you can get a 55-year interest rate guarantee. This thing will accumulate for 55 years on the income rider at 8 for the first 10 years simple and 5 for the next 11 plus. So you can sell it to younger folks. If you got somebody that's 35 years old, you can make this a part of their lifetime income guarantee process. It's the only product in the country that actually has that type of flexibility. The income rider also gives you the long-term care benefit. So we've got this really great income guarantee. The product's going to roll up for many, many, many years. But you also have a long-term care component. And with the long-term care, what I like about it is it increases the lifetime income withdrawal by 50% if you can't perform 2 out of 6 ADLs. And it could even be higher if you're in a terminal illness type of situation. So we've got long-term care benefits married in with the income account value base. And it also has a death benefit lump sum option if you want it. So long-term care, death benefit, income, all in one package. That's the new Athene product. Yeah,
that's a hot product, and right now it's burning up the sales right now.
Absolutely.
So if you haven't seen that product or you're not sure about the name, just call 1-800-290-7226, extension 125, and the annuity shop will take care of everything you need to know. Remember, you can watch this show and all our shows by clicking the red on-demand button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.